back to FlexCandle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice, and I'm not a financial advisor. Alright guys, so right now it's approximately 4:30 p.m. Eastern time. The price of Bitcoin is $104,419, and we're starting off here with the weekly chart. Still have 4 days and 4 hours before it closes. Stochastics are high. Yesterday kind of looked like it wanted to curve up. Now I kind of feel like it wants to go down, and the candle is kind of like a bearish hammer on towards the way down. You can see a lot of wickage here in the past couple of weeks, so there's a lot of resistance up here. We really can't get above 110,500. We're kind of far away from the 21-day moving average, which is at 94,713, and with this candle right now, if it were to close today, which is not, it looks like it wants to go down towards the 21-day moving average. One thing that I do like is that it does look like we're going sideways and we're kind of flagging out. So if this is the case, you guys already know I have this in a falling wedge, which should break out to 117. We already made most of the measured move, but since this is going sideways here for a couple of weeks, the next measured move, if we do get past 117, kind of looks like we want to make it to about 135,000. So that's probable, but we have to see because these stochastics do look like they want to drop down. We head over to the 3-day chart. We see that the stochastics are still trying to roll over on the way down. We have red candles here, closes about 2 days and 4 hours. 21-day moving average is at 102,124, so we're pretty close to that. If we lose this 21-day moving average, then we're probably going to this 50-day moving average, which is about $94,801. On the 2-day chart, stochastics rolled over. Now we have to see if we could bowl back up here and make it back up. We are below the 21-day moving average, which is at 106,011, so this isn't looking good here. On the daily chart, we again lost the 21-day moving average. Now we have 1, 2, 3, 4 days, 1 day that we got above, and now another day below. This was a really bad red engulfing candle, and so far this candle closes in about 3 hours and 20 minutes, which is at 8 p.m. Eastern time. We're getting an indecisive red candle. We even dropped below the 50-day moving average today. We went all the way down to 103,500, and now we're at 104,500. So we have to make it back above the 21-day moving average. If not, we're probably going to end up losing that 50-day moving average and end up going to this 80-day moving average at 97,445. Soon, I feel like if we continue going sideways though, this 100-day moving average, this blue line, is going to cross this 200-day moving average, the yellow line, and that's going to give us more of a bullish sentiment. As long as we could continue holding above this 50-day moving average, the red line, and going sideways. I've put on the patterns. As you can see, we've been flagging out and we've been within this pattern. Right now today, it kind of looks like we want to drop out, but the candle hasn't closed yet. Let's see what ends up happening. The RSI kind of turned over a little bit. The stochastic RSI here looked like it wanted to bowl up, then all of a sudden now it looks like it's dipping down. So we have to see how the next couple of days go. Tomorrow is going to be a holiday here in the US, so the stock market is not going to be open, so maybe tomorrow is going to be a flat day. There's a lot of war news that maybe they might strike Iran, so if that ends up happening today overnight or something like that, I expect more downside and probably going to this 80-day moving average. So let's see what ends up happening there. We head over to the 8-hour chart. We are below the 21-day moving average. We are still in this pattern, but if we lose it, we're going to go all the way down to this 200-day moving average, which is at 100,396. The stochastics are low, but we could still drag here for a little bit. On the 4-hour chart, we are below the 21-day moving average, below the 200-day moving average. If you see the stochastics, they want to continue to roll over here. I've been telling you guys, I feel like we might come down and eat up this wick, which is about at 102,700 or so. If we go below this wick, then I kind of see a head and shoulder pattern here that's forming, and if that's the case, then it looks like we might fall all the way down to the measured move of about like 97,000, which would make sense with that 1-day chart, which would want to go to the 80-day moving average, which I told you about earlier. So I have this here. Hopefully it doesn't. You can see we're still in this pattern, so maybe we just go to the bottom of this channel at 102. Like I said, double bottom from here and then come back up. That's what I'm hoping for. On the 1 hour chart, stochastics look like they're turning back up. We are still below the 21-day moving average, below the 200-day moving average. And on the 15-minute chart, we just regained the 21-day moving average now, and the stochastics are on the way up, but they're about to get toppy. So it's the same thing, guys. They've been playing around the same range that I've been telling you, between 103,000 110,000, unless we make it above this 200-day moving average again on the 4-hour chart, which is at 106,385, or above this 21-day moving average, which is at 105,749. I have to remain neutral to bearish. As soon as we could gain strength and get above the 21-day moving average here, or the 200-day moving average on the 4-hour, then I could get back to being a little bit bullish. All right, guys, that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.